What's up guys, if you're new to the channel, my name is Zach. I'm an engineer by day and a wannabe trader by night. I just wanted to make a quick video today to talk about my biggest mistake in investing so far. And yes, it does involve Elon Musk rat. As you're probably well aware, Tesla stock has absolutely skyrocketed lately. Today it closed around 750, and that's actually down a little bit from what it was over the last couple of days. But I want to roll it back a little bit here and talk about the first couple of trades that I made on Robinhood whenever I first started investing using this platform. And if you're not familiar with Robinhood, it's a trading platform where you can buy and sell stocks. I'll leave a link in the description below, and if you use that link to sign up, you'll get a free stock just for signing up. So let's take a look at my Robinhood account and look at some of the first couple of things that I did after I opened it up. So we can go ahead and go to our history here, and we can show all history. And if you scroll all the way down, you'll see that the very first thing I did was deposit $1 whenever I first opened my account in February 2017, because I was obviously going to turn that dollar into a few million, which clearly never happened. But maybe one day. So anyway, I basically didn't do shit with Robinhood for the first couple of years until last year when I actually finally deposited some money into my account, other than the first dollar, of course. So I deposited $74.99 into my account on September 8th, 2019. That was reversed because I'm an idiot and I left my old bank account linked, so that wasn't going to work. So they reversed that. And so you can see that I deposited $75.08 a few days later there, and I had to do $75.08 because I wanted $7,500, which you can clearly see from my second deposit of $74.99 plus $1 that I deposited 2 years before that would have been $7,500 even and satisfied my OCD. But that got reversed, and then they ended up charging $9 for the reversal fee. And so to make an even $7,500, I had to deposit $75.08. And that gave me the even $7,500 that I wanted in the first place. So I'm already off to a great start. I'm $9 in the hole. So now my account's charged up with $7,500. I'm ready to buy some stocks and turn that into a easy million. So what's the first thing I do? Obviously look at Tesla, right? Like any logical human being. So I add Tesla to my watch list, and I'm sitting there watching it, just waiting for a good dip so I can buy it up and flip that. Eventually it dips down about 5% one day. So immediately I buy it up because I'm obviously a genius and I know what I'm doing. This is the very first stock I bought on Robinhood. Clearly, I'm a professional. So I buy that at $2.30 a share, 15 shares. So eventually at $2.42 a share, I went ahead and sold it, and that's 12 bucks profit. 12 bucks a share, 15 shares, that's 180 bucks profit. But let's face it, after taxes, it's gonna be probably closer to 100 bucks. But anyway, I'm feeling pretty good now because I just flipped it, made 180 bucks from doing pretty much nothing, no work whatsoever. All I did was flip some Tesla stocks. So this was all around the time that Tesla had a few bad quarters in a row. And of course, when I did this was right before Tesla announced their first great quarter after like 3 bad quarters. They had great earnings per share, shocked estimates. Elon Musk did it again, folks. So stock prices jumped like 30 or 40% overnight, which is crazy, but it is Tesla and Elon Musk. So what can you say? You never really know what to expect from the guy. So now I'm looking at it, and I'm looking at that $12 a share that I earned by flipping the Tesla stock like a genius and wondering why I sold in the first place. Little did I know my regret had only just begun. Over the next couple of months, Tesla stock continued to rally to all new highs up until it was time for Elon Musk to announce quarterly earnings yet again. And at this point, I, along with probably everyone else, had no idea what Musk had planned for us this time. So now I'm waiting, curious to see what Elon Musk is going to pull out of his magical hat this time. And of course, Musk did it again and had his second good quarter in a row. So now stocks surged to all new highs. And they blew past 900, almost hit $1,000 each. And remember, I sold at $2.42 a share. So let's just do that math real quick. I bought 15 shares at $230 a share. I then sold those shares at $2.42 a share, making a whopping profit of $12 a share, which comes out to $184 profit total. I could have instead held on to that Tesla stock for a couple of months, later sold at say 900 a share, and made over $10,000 profit for doing literally nothing. So moral of the story, never doubt Elon Musk. He's always ready to take you to the moon. All you got to do is hop in that Cybertruck, buckle up, and get ready for takeoff. And that was my biggest mistake in investing. Okay, that's actually not my biggest mistake in investing. My biggest mistake was that I kept looking back at the missed opportunity that I had and dreading on all of that, getting stressed out, pulling my hair out, getting gray hairs for absolutely no reason over something that I couldn't change. There's always going to be something that you could have bought way back when, or something that you wanted to buy that could have doubled or tripled your money, but you didn't do it. That's just the way it goes with investing. You're not going to buy at the perfect time every time, and you're not going to sell at the perfect time every time. In fact, you're probably never going to buy at the perfect time or sell at the perfect time. And I think once you set that expectation with yourself, you'll feel a little bit better, and you won't constantly feel like you're failing whenever you make buys that aren't perfect or sells that aren't perfect. But you're still making money, you just feel like you failed because you didn't make the most money. Perfect example, aside from this Tesla escapade, a couple of months ago, I wanted to buy Shopify when it dipped down to $2.80 a share. And I actually had an order in Robinhood ready to be placed to buy 5 shares. All I had to do was hit the button. But I didn't, I got nervous and I backed out. And if you go look at Shopify now, it's close to $500 a share. That's almost double what I would have paid if I would have just bought that back then and not got nervous because I thought it was going to keep dipping and crash. But again, you can't keep beating yourself up over this kind of stuff. There's missed opportunities all the time. Just keep looking for the next opportunity and learn from your mistakes. These are just lessons that I'm learning as I constantly get more and more into investing. There's always going to be mistakes and missed opportunities, but no matter what, there's going to be more opportunity around the corner. You just have to keep looking for it. So try not to get too caught up on the opportunities that you missed out on, or you're just going to be stressed all the time and miss out on the opportunities that are currently passing you by. So don't worry if Musk is going to the moon without you, because he always comes back down to earth eventually. So don't jump on the FOMO train. So to kind of summarize all this, I'd probably give 2 main takeaways. The first one is don't stress over missed opportunities. There will always be missed opportunities and mistakes that you're making when you're doing investing, or in general when you're learning to do something new. It's always going to happen. But if you get caught up on those and always dwell on those, then you're just going to be stressed all the time over something that you can't change anyway. And you're going to end up missing out on the new opportunities that are currently passing you by because you're too busy and focused thinking about these other opportunities that you missed out on. And I know sometimes that's easier said than done. And some people are definitely better at that kind of stuff than others. I'm not the greatest at not dwelling on that kind of stuff. I mean, it's hard not to sometimes, but it is something that you have to just keep working on. The second thing I would say is don't try to beat the stock market. I mean, don't get me wrong, there's obviously a bunch of successful day traders out there and investment firms and brokerages and all this kind of stuff. But for the casual investor or aspiring investor like myself, 99% of the time, you're not going to beat the stock market. And for the 1% of the time that you maybe beat the stock market, it's not going to make up for the 99% of the time that it beats you. Not to mention the difference in short-term versus long-term capital gains, which is also going to eat more into those short-term profits and make it even harder for you to beat the stock market after taxes. And if you're not familiar with short-term or long-term capital gains, basically short-term capital gains are taxes that you pay on assets you hold under a year, and long-term capital gains are paid on assets that you hold over a year. And the short-term capital gains are pretty much always going to hit you harder than the long-term capital gains tax. Don't get me wrong, I do enjoy trying to pick individual stocks and buy individual stocks and pull one over on the stock market and scam the stock market for free cash. But of course, it usually doesn't end up working out in my favor. But I have made some purchases that ended up making me more money, where I bought the stock, sold it for a profit, took that money, bought another stock, held that stock for a while, and it ended up making me more money than I would have if I just held the first stock in the first place. You following me? I just don't think it averages out to come out ahead. And there's a lot of debate around this, but they say that only 1 out of 6 professional mutual fund managers are able to beat the broad stock market. That's about 15% of professionals. Now, I don't know about you, but I am definitely not a professional, so my odds are significantly less. Well, that's it, guys. I hope you enjoyed my adventure with Elon Musk rat, and you can learn from my mistakes. Don't get too down on yourself. If you make a bad purchase or a bad trade, don't try to beat the stock market. Keep investing, buy those stocks, and just say no to FOMO. That's all for now. If you enjoyed this video, smash like and subscribe to my channel for more content like this. Thanks for watching, guys. I'm out.